Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about yesterday's breathtaking sell-off, this morning's jobs number, and a victory day in Russia. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Yesterday was the worst day in the stock market since 2020. What happened and what is next?
Yeah, yesterday's just one of those days that, as a long-term investor, you know these things are coming, right? And that's right, kind of the best way to frame it. So whether you started 40 years ago or you started yesterday, you should always know in the back of your mind that there will be days like this in the future. My analogy is the weather. No matter how gorgeous the location, you know that some heinous thunderstorms roll through, tornadoes happen, hurricane, terrible things happen, but then they go away and life goes on. So that's kind of what's going on in the market here is, you can see the TD Ameritrade Think Pipes chart. We've had some big red. If you look at the red stripe down that we've had in 2020, there's been some fairly significant moves down. And, yesterday was 5% in the NASDAQ, just shy of 5%, 4% across the board. But when you really put it all in, it seems horrible, right? But we didn't even close as low as we were, what's this, Tuesday, right? So, we're back to where we were on Tuesday, which doesn't seem nearly as bad as we dropped 5%, right? So big picture, we're still holding this area of resistance. I think it holds today. If anything, I could be guilty of being a little too optimistic. But when you look at the bottom of this area has been the resistance area. So I do think it holds it and we can move higher from here. But really the big picture is days like yesterday. That's if you like checking your portfolio stuff several times a day, don't do that on the big down days. When you see it's a big down day, just go, okay, that's ugly. Go do something else, look away for a while, and you can go back and check everything later on. But I will say this, if, especially on the strength of Wednesday and the 4% move up, I do think now is a good time to put money to work. I've been an optimist through this and I've bought each of these dips. And so far I've been wrong. But when we're off to new highs, whether it's, the end of this year or next year, or even in 2025, anybody who bought in here is going to be up, 20+% from when you bought. So while it's ugly now's the time to go find the extra cash that you have, maybe pull some out of the bank account, maybe move some things around to be able to take an opportunity of lower stock prices here. So, we keep revisiting this low, but I think this is when you look back, this is going to be a buying opportunity. And, when the S&P here or the SPY's up at 500, a year and a half from now, you aren't going to care whether you bought this dip, or the current dip that we're in. Everybody's going to be up. Just, these folks who are buying now are going to be up, like 1% more than the other folks that just already bought earlier. So look away from the negativity, look at the opportunity to buy some stocks here on the cheap and, focus really on best of breed and go from there.
Next, the non-farm payrolls number paints a strong picture for the economy with the employment number coming in at 3.6%. What's your take?
Yeah, so you've got we'll toggle back to the jobs number here. So these things come rolling in. We had a productivity number that was negative yesterday. I don't normally follow that number a whole lot, but I do follow the jobs payroll, non-farm payrolls numbers that come out. So yeah, it's exciting, right? So the number in here, how many jobs were created? I want to say it was 400,000 and some. I don't see the exact number jumping off the page right now, but really it's down at the bottom here. Well, no, guess it's not. Really the important part of this is there it is, 428,000, over 400,000 expected. So when you're looking at almost a full employment, right? So 3.6% was the official unemployment rate. That's amazing. So when you have the forces that are acting on the economy, you have the Fed raising rates, 50 basis points, which was initially celebrated, and then people got scared again. The market sold off yesterday. But when you really look at, are we going into a recession? Well, if we have everybody working, all but 3.6% of us, that's pretty amazing, right? So, that's the plus. And then the headwind is, of course, the raising rates that are out there. But that means if we do enter a recession, I think it's very tough to enter a recession with almost full employment. But if we do enter a recession, it's not going to be the mother of all recessions, right? It's going to be, okay, we're here. It's going to be temporary. The Fed will stop raising rates at some point in time because inflation will be under control. I already think we're past peak inflation myself. And so at that point, even if we dip into recession, I think it's going to be a short-lived recession. So overall, I think the jobs number paints a great picture for the future of the U.S. economy and the subsequent recovery of the stock market here in 2022.
Last, May 9th is celebrated as Victory Day in Russia, marking the then Soviet Union's defeat of Nazi Germany in World War II. Many pundits are expecting a major announcement on that day. What do you think?
Well, it's a coin flip, right? And it really is. From the beginning, I used the 2014 or 2015. I can't remember which date it was, but when Putin went in before, fought basically from February to May, annexed the Crimea area, and then went away. So we are set up for that to happen right here on May 9th, to where he could say, pull his forces back, saying we're keeping the two provinces out on the far west, which are pretty much Russian anyway. We're keeping these, and at that point, if Zelensky and Ukraine accepts that deal, then everything's over. And everybody gets to walk away, declare victory on both sides, say we've reached an agreement, and go on about our lives. Now, that's kind of the optimistic scenario, if you will. The other highly negative scenario is, does that mean he's going to announce a tactical nuclear attack there in Europe? There has been some talk of nuclear weapons being actually used. We hear that in the U.S. and we're thinking, Washington, D.C. blowing up. That's not really what I think's in store, but there certainly could be a tactical nuke use in Europe. If that happens, then now we're probably going into, we're taking things and escalating them significantly. Not necessarily, doesn't necessarily crush the market. Wars overall, wars are terrible, of course, but wars are kind of good for economies because all the production. But I don't think that's going to happen. I think it wraps up. I've been kind of calling that from day one, so I'll stick to my original call that things wrap up and forces go home, and there's some sort of agreement. But certainly, that's Monday, so stay tuned throughout the weekend to see if whatever posturing is going on out there, and expect Monday that there's going to be some movement of the needle one way or the other on Russian Victory Day.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.